How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update for UJ, US dollar versus Japanese yen. As you can see, we ran back into that old 60-day high, and we got a reaction off of it. Price is now breaking the previous daily high, Monday, and then selling down. So if you're in the chat on the channel, you also saw the buy setup and sell setup during the New York Open session. And we'll talk about that a little later in the video. But all in all, I'm still bullish because we have the speed to the upside and prices breaking swing highs. So there's a market shift. I want to see a higher swing low formation fall inside of this PD array here. So as of right now, we have the opening price for May here. And we know anything above it is a premium. Anything above it is a discount. So high probability buy scenarios are most likely going to unfold underneath the opening price for May. So if we could get a swing low formation underneath the opening price, and it coincides with a higher swing low for the weekly chart, then this thing is most likely going to be bullish, especially within this PD array here. So I'm just anticipating something like this. So if I had to draw it out in candlesticks, it would look like this. So price comes down, we get another candle, and it's lower than that one, and the next candle does not break that low. That would be our higher swing low formation that I would suspect to happen here on the daily chart. So something like that. That's where the commercials are most likely going to be repositioning themselves to go long. So they're probably going to be increasing their net long positions while you're seeing down closed candles. So this could be a buying opportunity for them. Even though it's closed down and it's a black candle, doesn't necessarily mean, oh, price action is now topping and going to go short and it's going to keep taking out previous daily lows and trending lower. That may not be the case, because we could see here for April, just as an example, look at all the down closed candles, 1, 2, 3, and look what happens. Eventually there was a turning point. Two down closed candles. What happens after these two down closed candles? Buying. And a higher swing low formation here. 1, 2, 3. This swing low is higher than this one here. So in April, it made a higher swing low. That could be happening here again. That's how I read the price action in a bullish trend. If we were to look at the price action from an hourly perspective on the weekly chart view, so we got Sunday to Friday, and this is going to be Thursday, and then we're going to have Friday right there. So we got Sunday, Monday, Tuesday right now, and this is all the way up to Friday. We have the opening price, so we also mark that out. And we can see we're above the opening price right now. We're in a premium. So it was likely that price was going to take out a previous daily high and give a short opportunity. So price takes out Monday's high. So today, Tuesday, runs up during London, takes out this high here, and we'll turn it into red so we can see that. And what's above this high? Most likely buy side liquidity. So price runs the high and then goes short. And we found a short opportunity during the New York session here to come back down and take out the previous daily low. So you can see how it takes out the high and the low. And that's where sell side liquidity is residing. But we're still above the weekly open. So a sell scenario can still unfold here. Once we get below here, then we could look for buying opportunities. And if we go back to the daily chart, so we could actually put the busy on there and see what it looks like. Back to the hourly. You can see that's where that buy side imbalance, sell side inefficiency is laying. So that's that daily right here. That's that here. So if price were to come down in here, I would look to see where a potential buy opportunity would unfold here, because it's going to be in a discount. It's going to be cheap. Though this weakest NFP could be seeking the shorts, taking out previous daily highs, previous daily lows. Odds are, I think by NFP, they're going to rent this to go back long. I could be completely wrong, but I'm suspecting that Friday, dollar should continue to go higher. So if we look at the DXY as well, you see our price took out this swing high that I mentioned. And now that it took out this swing high, I'm suspecting a higher swing low to form. So it has to be higher than this one and the most recent one we have in price, which is here. So if this is going to be a new bullish trend for dollar, it's going to create a higher swing low eventually. So it's going to take out a previous daily low. It's going to purge a low, then revert back to buy side, and then continue to follow that pattern. So after making a swing high, it's going to make a higher swing high and a higher swing low and continue trending bullish. We do have that 20-day look back high that is relatively close to price action as well. And if we look at the futures contract for the yen, you can see how we're pulling back into the SIBI. So you have this to this. That's the SIBI. So there's a sell side imbalance and buy side inefficiency. I would like to see a lower swing high form here because a swing low, multiple swing lows, that was one, and this was one as well. And we also did fill the gap in here as well. But it doesn't necessarily mean we fill the gap and then we go higher. Many people think that, oh, price fills a gap and then immediately is going to respect it to go higher. That may not be the case. So we'll type in gap. I'm going to leave that there. But that's what most people would suspect. Price fills it, hits it, and then runs higher. I've seen countless of times price run into a gap and not respect it and continue falling below or falling above it. But I want to see a lower swing high formation form. So that's the higher swing high that we currently have, or the swing high that recently formed in price. And you can see how it's lower than this one here and this one. But you can see how it did run this one here, false break. Because you can see how it runs up, takes out a swing high, purges the swing high, but then reverts back down to the swing lows. So it's a false break. They're running buy stops here. So they quickly run anybody that was going long, they run their shorts. Or anybody that was going short as well. So if you're going short, you have a stop loss above this high, it runs out of it. We got an X to show that that was ran. That was like a false break. We want to see yen get weaker at this point and create the lower swing high here. So you want to go lower, just like that. So it's going to be that and a lower one here. So hopefully this was insightful. We can also see the setup for today before I end it, because many people may have wanted to see the setup. So simply what I'm doing is I'm coming down to the 15-minute time frame and I'm marking off 5 a.m. to 7 a.m. So this is the London lunch. So before this, it's going to be 2 a.m. to 5 a.m., which is London open. Or if you started at 1 a.m. as well, you add that additional hour, 1 a.m. to 5 a.m. That's your London open. Here in between, there's a break period. So I call it the London lunch. You're normally going to get a deep retracement or consolidation here. So a lot of people that make profit during London, they normally get knocked out right within these next couple of hours from 5, 6 to 7, these 3 hours. Or it just consolidates and it creates a range, swing low and a swing high. So that's what I have marked off here. So if I bring it back just before it starts, that's what you see here with the money sign. Swing high, swing low. This isn't a swing high yet until the next candle forms and closes here. But as you go about it and it's live, you'll see how it is a swing high. Once that happens, going into the New York session, I'm looking at the opening price, and we can see it opens, so it makes that swing high. Doesn't take out this swing high, but it takes out this swing low immediately. That means something down here on the lower time frame can give me an opportunity to go long because we're below 7 a.m. opening price. Anything below 7 a.m. opening price is a discount, which is a high probability buy scenario. We can see here, price creates a fair value gap. The first one. Now there's no market structure shift here. It's not running through a swing high, but it's the first fair value gap, the most obvious one that we can see after taking out that 15-minute swing low. Price takes it out. That's the fair value gap. You're going long here. And this is from if you were to buy at the beginning of the fair value gap, or the ending, I mean, the premium range. This is the premium side, the top side, and this is the discount side, the bottom side. So if you're buying on the premium side, as soon as price taps it, this would be the projection of 15 pips profit. And you would set a stop loss of either 15 pips or 20 pips, a 1-to-1. And then you hold to see if you could potentially grab the 15 pips. And that's how you gauge a feasible trade setup. You've got a tear down too here. See how price breaks down? You could suspect price to go back into a premium range if you measure this high to low. This range to that range, cut it in half. Price could most likely reach back into the equilibrium point. And you can see how price trades back up to that 15-minute swing high. So that's where price is now. So go back to the 15-minute time frame, comes back to that swing high. Where is it as well? Above the opening price. Anything above the opening price is premium, high probability sell scenario. And we're also above the weekly opening price. So Sunday's opening price. So the same thing that I'm talking about with the opening price here. If you look at Sunday's opening price and price is currently above it, then you know you have a high probability sell scenario, while also taking out the previous daily high. Price then breaks down, tapping back into that fair value gap, as you can see. Now, don't mind that it gets above the fair value gap. This psychs people out. They lose faith in the trade setup. I've been there multiple times. They don't hold it. They get out, or news is about to arrive at 10. Price is most likely going to keep breaking down. And you see price trades up multiple times. It tries to run above 7 a.m.'s opening price. And I'm not concerned about the news. And there we go. Price comes back down and takes out the clean lows right here that it made below this. So look at how they engineer these lows right there. And price runs right through it with speed. See that right here. So there's sell side liquidity there, sell side liquidity here, sell side here. So just running back down to the swing lows. So if you were to mark out every single swing low on this leg going up, you can see how they target and take it all back. They mitigate all that back. All their losses where they're selling on the way up, they're mitigating it back down with this sell position here. So hopefully this was insightful. Peace.